We've never seen anything like this in recorded history. So be worried. I'm not short. I haven't sold short anything, but I am certainly worried. As I look around the world, bonds are clearly in a bubble. Bonds have never been this expensive in the history of the world. Property in many places, you go to Korea, you go to New Zealand, you go many places, property is certainly in a bubble. Stocks, many stocks, Amazon goes up every day. 10 cent goes up every day. Samsung goes up every day. So some stocks performing a bubble, but many stocks are still not up. So it's not a complete bubble yet. So there you have stocks, property, bonds, all in bubbles or forming bubbles. The only thing that's still cheap, commodities. Silver's down 60% from its all-time high. Sugar's down 70% from its all-time high. Oil is down 50%. I mean, these are not bubble numbers when you talk about big declines, historic declines. But with all the money being printed, the asset class in the world that I prefer at the moment would be commodities because they're cheap when everything else is booming. I do own stocks. I do own stocks in places like China, Russia, Japan, other places. But I'm not rushing out to buy unless I find something really good. Well, I said, I'm not short. I know it's going to end badly. If something comes along that's good, I'll buy it. But Adam, I know this is going to end very, very, very badly. To repeat, the better it gets, the worse it's going to get when it comes to an end. I would suspect that when it ends, we're going to have the worst bear market in my lifetime.
Jim Rogers stated that we're likely heading for the worst bear market of his lifetime. He pointed out that in 2008, the market experienced a significant crash due to excessive debt, and since then, debt has skyrocketed to unbelievable levels worldwide, even in China, which didn't have much debt 20 or 15 years ago, but now has a considerable amount. Rogers questioned who will save us this time, noting that in 2009, it was the Chinese who stepped in with money they had saved for a rainy day. However, he emphasized that China no longer has that financial cushion. Rogers expressed doubt about anyone stepping in to save the global economy now. He even mentioned North Korea, pointing out that while the country doesn't have much debt, it also doesn't have the savings needed to rescue the situation. Rogers also stated that he has little confidence in the so-called they, the people some believe could save us. He remarked that it's a good time to be old in America, as he won't have to bear the financial burden when everything comes crashing down. However, Rogers is deeply concerned about the challenges his children will face due to current policies. He stated that it's inevitable things will end badly, and when they do, both a currency collapse and an economic collapse could occur. He pointed to the 1930s as an example when the world faced both, leading to war. Rogers emphasized that there isn't much good news on the horizon, referencing 2008 and 2009 as prime examples of what happens when debt spirals out of control.
Since then, the debt has gone through the roof by unbelievable amounts. And I know that's going to end badly. If we know what's going on, we'll get worried. And if we get worried, we'll probably get prepared, and then we might survive. Some people came out of the 30s very rich. Most didn't. Most lost huge amounts of money. But in 2007, Iceland went bankrupt. Nobody cared. And a few months later, Ireland went bankrupt. Some noticed. A few months later, Bear Stearns went bankrupt. Now we're starting to notice. And then BlackRock went bankrupt, in the big bank in England. And then eventually, Lehman Brothers went. Well, then it's on the evening news. Then everybody knows. So my point is, these things snowball, and they start where we're not looking, and it may have already started for all I know. I've seen some small places having problems. But as I say, I'm not selling short yet because I know how much money these guys can print. And what I would suspect is going to happen, Adam, is somewhere along the line, next month, stocks go down in lots of places. Well, then they're going to really panic because they want to keep their jobs. And so they're going to print even more money. And so we'll have a rally. have a rally, but I would suspect that that would be the last rally because there's only so much. I mean, eventually the market says, wait a minute, guys, we've seen this movie before. We know how it ends. We don't care how much money you print. When you have bad times, there is usually social unrest. People aren't happy. And if we do, in fact, have the worst bear market of my lifetime, which I don't see how we can avoid, if and when that comes, there are going to be a lot of very, very unhappy and angry people. And one difference in now and the past is people really get angry now. They think that you can't do that to me. In the 30s, people were a little more disciplined, a little more understanding of what was going on in the world. They weren't happy. There were protests. There was some violence, not much violence, in the U.S. anyway, since that's what we're talking about. But people were a bit more accepting of the system. No, Adam, look out the window. Nobody accepts anything now. You can't do that to me. It's your fault. It's not my fault. So, no, we're certainly going to have social unrest, certainly in the U.S., but in other countries as well. You find out what's going on. If you do, you'll get worried, and then you'll get prepared. Because, Adam, it's very clear. This history shows that when things go really wrong, what history shows, first of all, politicians blame foreigners. They always blame the foreigners because that's easy to do. But then it also leads to unhappy people and social unrest.
Jim Rogers stated that the main lesson of history is that people don't learn from it. He noted that we had a president recently who either didn't know history or believed he was smarter than history, thinking it didn't matter. Rogers emphasized that history is smarter than any of us, and that it does matter when people become unhappy. They look for scapegoats, and that's when things start to go wrong. He pointed out that governments and central banks around the world have already accumulated trillions in debt, an amount that would have been unimaginable not long ago. Rogers expressed concern about what might come after trillions, speculating that we might have to learn new vocabulary in the next year or two if things continue on this path. He highlighted that nearly every government and central bank has been printing and borrowing vast sums of money, leading to a situation of excess that has never been seen before in recorded history. While some may see this as normal or acceptable, Rogers warned that it has inflated many markets. He illustrated this by saying that building a bridge takes time, but with the amount of money floating around, investing can be done in seconds online, contributing to the ongoing market frenzy. However, Rogers noted that there are signs this might be slowing down. China, for instance, appears to be cutting back a bit, though not significantly. Other countries are also talking about cutting back, and even the US has mentioned the possibility, though action seems distant. In the meantime, Rogers pointed out that enormous amounts of money are still circulating, affecting both markets and the real economy. He described the situation as artificial, mentioning that sectors like the shipping business are booming simply because of the excess money. However, he cautioned that these situations always end, and the better things seem to get, the worse the eventual crash will be.